It's my pleasure to present to you GMINing Ventures. I will be making some forward-looking statements, so just be cautious. So we are a fully funded developer currently building the Tocantinzinho gold project in Brazil, as Brian mentioned. We'll just call it TZ for short to make my life easier. So TZ is anticipated to become the third largest primary gold mine in Brazil once in production. And that's underpinned by over 2 million ounces of proven and probable reserves at over 1.3 grams per ton, which comes right to surface, so quite respectable for an open-pitable resource. And so the company was launched 3 years ago by principals of GMINing Services, the GENIAC family, who are the premier mine building group in the mining industry. And they've delivered over $2 billion in construction capital to date, on time and on or below budget for other mining clients such as IAMGOLD, Newmont, and people in this room are probably familiar with the Fruta del Norte project for Lundin Gold. And how does that relate to us? Most importantly, 4 of those mines are on the Guyana Shield, which is a very similar geological setting and environmental setting to the TZ project, which is in Pará State in Brazil. So not only does the mine build team have a track record of building mines on time and on budget, but more particularly in the exact same setting that we're currently building a mine for our shareholders. So all of those factors combined is why we were able to attract some of the preeminent financial partners to invest $481 million in us in July of 2022. So Franco-Nevada invested over $350 million, which is a comprehensive package consistent of a gold stream, term loan, and also equity. And La Mancha is a well-known private equity group out of London, and they have a strong track record of success as well, and they invested $69 million in equity. And Eldorado Gold reinvested in the project, and that's actually who we acquired TZ from originally in 2021. And that package was then rounded out by Cat Financial, who provided $40 million in equipment finance. So this package had the aim of minimizing dilution to our shareholders, and now we're fully financed through construction to positive cash flow. So what does the project look like? We produced an updated feasibility study in February of 2022 to fully bake in the inflationary pressure we have already seen at that point in the industry. And it contemplates a very robust project, open-pitable, and using conventional CIL processing flow sheet with a capacity of 12,000 tons per day. The estimated development capital is $458 million, and at an all-in sustaining cost of just under $700 per ounce, and producing 175,000 ounces per year for 10.5 years, and that gives you an after-tax NPV at $622 million and the IRR of 24%. And that was done at $1,600 gold. So that gives you a lot of upside potential from the gold price as well as our exploration potential. The sensitivity, just for ease for you, is that for every $100 gold price movement, that implies $100 million in NPV, change in NPV. So again, we're underpinned by over 2 million ounces in proven and probable reserves in a large vertically oriented granite intrusion that comes right to surface. It's 200 meters wide, as you can see over here, and it's interspersed with some high-grade intervals as well within this largely homogeneous ore body. Our next phase of exploration will be focused on generating high-potential drill-ready targets using a large data set we have collected doing geochemistry and geophysics work over the past year. So the project is currently well advanced. It's actually sitting at 76% complete. So what we call the balance of plant, which is the ancillary infrastructure, is largely complete. And now our focus has shifted mainly toward the process plant. So out of the 458 million CapEx, we have spent 375 million and have seen total commitment of 430 million. So currently, with only 6% of the CapEx left to commit, we are still trending on time and on budget to achieve commercial production in the second half of this year. One of our proudest achievements, though, is that we have so far been lost time incident free up until December 31st, having worked over 4 million person hours on the project. Employment peaked at just over 2,200 people in August, and is actually starting to trend down as a lot of the heavy lifting it's behind us now. And we're also proud of the fact that we've been able to maintain 95% of Brazilian employment. So over the next few slides, I'll show you some of the progress we're making at site after actually 16 months of work. So the mining rate has already exceeded over 50,000 tons per day, and that's even during the rainy season. Pre-production mining has mostly been focused on the waste area to generate material to feed our aggregate plant for construction purposes, as well as to construct the tailings dam. In November, we've reached the first ore, and so we've started to stockpile the ore to get ready for our commissioning activities. Here you see our MSE wall behind the primary crusher, and then the overland conveyor then leads into this ore reclaim tunnel. So that's fully been assembled and commissioned as well. And here you see the process plant infrastructure. The ball mill and the SAG mill have arrived on site in October and December, respectively, and are now being assembled. And the CIL tanks have been assembled and hydro-tested, and right now are undergoing piping and electrical work. The assay lab on site is fully functional and has been used for grade reconciliation work with that mineralized material now we're mining. So 95% of our tailings is benign and will be deposited in the flotation tailings storage facility, which has been designed and constructed to Brazilian legislation, which exceeds international standards. So our dam break study has demonstrated that there is no community or infrastructure downstream from this tailings facility. And the CIL tailings facility will take only 5% of the tailings, and as you can see, it's now fully lined and ready to receive material. So one of the reasons for our very low AISC is our low power cost. We spent $33 million to construct a 193-kilometer long power transmission line to connect to the Brazilian national grid. And our power purchase agreement we signed in the middle of last year guarantees 100% renewably generated electricity to us from hydro, wind, and solar sources. And more importantly, that gives us 25% less in electricity costs than contemplated in the feasibility study. And 2 weeks ago, we just announced that the power line has been completed and commissioned on budget and ahead of schedule. So this timeline slide really has not changed since we acquired the project in 2021, other than that faint blue line here that I drag across to mark the passage of time. So now we're still just about 6 months away from first gold pour, and then commercial production will be later this year. So of course, none of this is possible without our supportive shareholders, which, insiders, including the GNIAC family, management, and board, are also fully aligned with fellow shareholders, sitting at 8% of the company, being the fourth largest group of owners. Brian showed this already, that we're more than 100% up from last year's attendance at this conference. And I just like to point out that we have also outperformed the gold price, the Junior Gold Developers Index, as well as the S&P index. Leave you on this slide. So since the inception of the company in 2020, all of these milestones have been achieved very quickly and according to our guidance to the market. So the upcoming catalysts include that first pour in the middle of this year, commercial production in the second half of the year. And in the meantime, our team is busy opportunistically evaluating additional acquisition targets to move us toward our objective of becoming the next intermediate gold producer. Thank you.